So before we even start with today's session, I want to glance back to Friday in the market. We saw a roller coaster. It was all about news out of D.C., right? Remember when it looked like Congress was just going to throw in a towel on any additional fiscal help? The rally faded big time. Then came word that talks would continue over the weekend, and the market actually soared. Now, for me, the most important part of that session was the volume. It was the highest day of volume in the entire month of July, and it was on an up day. That is a huge buy signal, in my opinion. I want to bring in disruptive tech research founder Lou Basanese, Money Map Press, their chief strategist Shaw Galani, and Aaron Gibbs of Gibbs Wealth Management. Shaw, just your thoughts on this market. It's breaking out, and the volume is getting stronger. I think that's the ultimate buy signal.
You're absolutely right, and it was the buy signal coming off of the lows in March. And I think what people miss is that the markets kept closing higher on Fridays on better volume. We're seeing that again now. This was probably the first. I think we're going to continue to see that. Not only was it the best volume of July, it was terrific volume on a Friday going into the weekend. So very positive.
Aaron, your thoughts? Again, I think Friday's session was a microcosm of pent-up demand having to get into this market, and buying certainly began buying on Friday.
Yeah, and Charles, look, we talked about this last week, how the volume that we've seen in July has, particularly the last half of July, it was at the ultimate lows of just like we've seen March. So any pickup where we're really seeing investors come off the sidelines is a good thing. And certainly Friday, hopefully that starts a trend and it's just not a one-day signal.
No, I don't think it will be. By the way, the NASDAQ, of course, hit a new high on Friday, hit another record high today, being led by Microsoft, which might end up getting what I think would be a gift of TikTok. Lou, I want to bring into this discussion here. What do you think is going to happen here?
Look, I think it's most likely going to happen, but it's just an odd couple. I mean, I can't get the vision of just Steve Ballmer and dorky dances with Bill Gates on TikTok out of my mind when this deal gets consummated. It's just, it doesn't make sense. If you look at the user demographic that Microsoft has in its core business and the user demographic for TikTok, 41% is 16 to 24-year-olds. These are not Microsoft Office product users. A deal with Apple would make much more sense. 51% of TikTok users use iPhone. I just really think this is going to be, it's legitimate. I mean, the news would not have broke that there was talks happening if it wasn't real. I just worry about this. This is overpaying in a faddish industry, social media. You get a lot of these networks and platforms that ramp up quickly and don't amount to anything. And Microsoft has a spotty history here. Anyone remember the enterprise social network Yammer? Probably not. It was an acquisition they made back in 2012 that went absolutely nowhere. I think TikTok's not the right partner for them, but a deal needs to get done.
But here's the thing, though, Aaron. I think the money is starting to lean toward this deal happening. They would have to deal with the fact that half the customers are still in China. So how do you completely sever that? Also, to Lou's point, they weren't summoned to Capitol Hill last week. They're not in the crosshairs of Washington, D.C. Does this change that?
No, I don't think so. In fact, I think one of the reasons they're going to them is because they're one of the ones that wasn't summoned. Because really what would really make sense is more of a Facebook, because it merges already with Instagram. I mean, that makes sense. But since Facebook is in the crosshairs, we're not about to give them another company. So I think, look, like the owner is really caught between a rock and a hard place of losing half his customers or selling, and obviously you at least want to take some money rather than lose your customers. So, and certainly Microsoft is willing to make or it sounds like they're willing to make the acquisition. So I see this going through, even if it doesn't necessarily make the most sense. Washington's putting their fingers in it and making deals happen.
Well, the bottom line is it's certainly moving shares of Microsoft. Lou, I want to go back to you real quick because I remember last time we spoke, you felt like you were mixed or at least cautious on some of these mega cap names. That was before earnings results. Are you feeling any more bullish right now? Because there were some monster wins on Thursday.
Listen, I'm bullish on the ones we talked about, Apple and Amazon, because I think they have true networks that they can expand into new growth markets. You saw the numbers in this, way better than expectations for iPhone sales and services growth and wearables. Amazon had a 40% increase in revenue on pandemic spending and cloud growth. I would be weary, though, of the Facebook and Googles of the world reliant on advertising. You're starting to see a deceleration of growth there. And if we go into a protracted economic decline or maybe even a couple quarters, online advertising gets hit. I mean, the last time we went through a recession, Google's share prices corrected 50%. I think that's a risk. When the growth is gone, so is the grace from investors, and you have to you got to focus where the growth is.
Shaw, I know a portion of your plan right now is to be into some of these groups that aren't moving big yet, undervalue things like financials. Are any of these big mega cap names, particularly after earnings, more attractive to you?
I think they're going to have to come down a little bit. They certainly were attractive, have been attractive, and remain attractive. But as far as adding to positions here, with the jump some of them have made, no, I'm going to have to wait a little bit, especially Microsoft now, and also Apple and Amazon. But I think they're going to come in a little bit. I think investors are going to get a little bit tired of this rally, and we get a chance to buy them a little bit lower. But they're definitely a buy, all of them, except maybe Netflix. I think has had its run.
All right, I remember a presidential candidate saying we never get tired of winning. Certainly, so we'll see. We'll put it to the test with these mega cap names. In the meantime, speaking of earnings, guys, the season continues, and so far it's been really much better than expected. The majority of companies, even this morning, handily beating estimates. So far, I think coming into the week, 20 positive pre-announcements, only 7 warnings. Aaron, you have been skeptical about earnings season, but down 33%. I know it's a lot, but we thought it would be down 43% in blended earnings. The overwhelming majority of beating. Has this changed your thoughts about where this market is? And are there any stocks that are standing out to you as buys now that you've seen these numbers?
So it's great. I'm happy that we're looking at Q2 at only losing about a little over 1/3 or contracting by 1/3 versus almost 50% at one point. What I'm concerned with is the beats are around 80–83%. That is not unusual when we're only about 2/3 of the way through earnings season, because typically the people who miss the most are at the end. So that may come down. It may be slightly higher than average, but the average is 7%. So I'm just holding my breath.
Is there a name, Aaron, is there a name that's impressed you enough in this earnings season that you've added it to your portfolio?
So far, I haven't added any. I've felt more assured about the ones that I've been talking about, certainly with some of the beats that I've seen. But my big concern, Charles, is when you look at Q3 and Q4, those expectations have not budged. They haven't even moved by like 50 basis points. They're exactly the same that they were 4 weeks ago. So that's telling me that people are still highly uncertain about what's going to happen in the second half of the year. So even though we have this, we're really crediting the beats in the second quarter to the stimulus plan, and we're not entirely sure how it's going to go for later on. And so I'm still a little hesitant. It's been great what's happened.
Hey, just moments ago, James Bullard said we're probably living in the very best quarter for the economy since World War II. Shaw, anything that you saw so far in earnings season that made you pick the stock up that maybe you had written off or weren't thinking about before?
No, we picked up some stocks that we hadn't been in before earnings because the assumption is and remains that earnings are going to continue to beat. And again, at around 84% beat so far from all the reporting companies, that's tremendous. But not only that, that's on earnings per share. About 69% of the companies that are reported have beat on revenue, which is even more impressive. And granted, these are all knockdown earnings estimates, knockdown revenue numbers, but the beats are what the headlines are about. And that's what investors are following. I think when they continue to see momentum across the spectrum, and a lot of names, and ones including that have been beaten down because earnings are coming in better than the estimates.
They certainly are. Lou, I know you told our staff you're looking at NXPI. It's a name that I'm into. I'm down only 20%, so I hope you're right. Lou, Shaw, Aaron, thank you very much. Appreciate it.
Thanks,
all right,
Charles.
folks, right now, Secretary